I think AI over the next 20 years is going to automate virtually everything.
I'm in the same camp as you, and it terrifies me, the implications of that for the labor market.
The Luddites are going to win the media contest, but they will not win the economic contest. Trump can raise taxes. No question he can do that. But no matter how much he raises the taxes, he will not lower the deficits because there is no such thing as cutting spending. I think that Trump's increase in taxes is going to become extremely disruptive to the economy. But I think we're going to have some kind of a major economic hiccup next year. The combination of these incredible tax increases with the job replacement from AI.
Welcome to the Porter & Company Black Label Podcast, your home for provocative insights that lead to lasting wealth. And here are your hosts, Porter Stansberry and Aaron Brabham.
Porter, welcome to another Black Label episode. It's the final one of 2025, and we've got a great guest. We've got Luke Lango.
Brabsy, we did it. We did another year of broadcasting and recording and publishing and not going to jail.
Not getting canceled.
It's a miracle.
We brought you back from the brink of near bankruptcy to having actually a really, really solid year. It takes a little while to put all the pieces into play. And, it takes a lot of front-end capital investment, Porter. You went out and you hired A-plus team players. You got Erez Kalir. You have Martin Fritzen. You have Ross. I mean, you have the best in the business. And it takes a little while for us to prove what we can do. But I got to tell you, we've done it. And I think that we're entering the fourth year sprinting. We're not getting to the starting line. We are sprinting across it.
What is it with the hero's journey when it's after the initial arc and then you have that down period and you have that, what is it, the existential crisis or something like that?
Yeah, existential crisis.
So I think this time last year we were in our hero's journey. We were in the middle of the existential crisis.
Yeah, it was rough.
We've made it back to the surface, and we're doing great. And I'm so pleased with the work that our company has done, the returns we've earned for our subscribers, and the quality of the ideas we've shared here in this podcast. And I am so excited about the interview today. I hope that we can get to that first because there's so many questions in the market right now about technology and the big AI spend and the depreciation schedules and all that. And quite honestly, I'm not in it in terms of like direct exposure to the way that I used to be when I started 30 years ago. But we have someone today who is directly involved in these tech issues and has firsthand knowledge of all of these situations.
Yeah, that's right. We've got Luke Lango with InvestorPlace. He's super sharp. He was at our conference. He's unbelievably knowledgeable. I'll tell you one thing, Porter, that I think that you've done the best at is leveraging your network. When you were calling for the shale boom, when everybody was calling for peak oil, you had Cactus Schroeder, right?
That's right.
You always find.
I had a guy who was actually drilling oil saying, "We're not running out of oil. I've never seen so much."
Exactly. But you always seem to partner with the exact insider that we need for getting the depth of the guru for the information that our subscribers are looking for. And that's what Luke is. So let's just get right into it. This is going to be exciting. Luke, let's bring him into the show. Porter, here he is. Luke Lango. Welcome to the Black Label Podcast.
It's great to be here, guys. Thanks for having me. Truly a treat.
Luke, I love talking with you about everything tech. Can you give me your perspective on how investors should manage the extraordinary increase to CapEx spending we've seen from the hyperscalers into AI, massive technology investments? How do you make sense of, for example, PE ratios when it seems like this build out is going to be relatively short, a 3 to 4 year process. And of course, what are the risks to these promised CapEx investments not manifesting? And then sort of, therefore, what's the risk of the AI bubble scenario? What's your view on all that?
Yeah, I would say that was actually one of my main hesitancies with the AI boom to start with is when the AI boom got started back in 23, I was very much pro software over hardware. That when you look back at like the dot-com boom, the secular winners, the long-term winners were the software winners, not the hardware winners. But what we saw in 23, 24, and 25 was it was the hardware companies that were taking the mantle. And that's because of that AI CapEx that you're talking about. My concern was that these are all cyclical companies. Like you look at some of the biggest winners in the last 3 years, and it's Micron, it's Seagate, these are highly cyclical companies that when booms are booming, they boom. And when the bust comes, they absolutely collapse. And so I was always hesitant to really get involved with a lot of those highly cyclical names, but the bazooka that the big tech companies hold, they just keep firing that gun. And as soon as Wall Street puts pressure on them to decrease spending, like in the case of Meta just had earnings and it wasn't very good and concerns about overspending. Operating margins had expanded consistently for 3 years and finally reported a quarter of operating margin compression. Well, Zuckerberg turns around and fires 30% of his metaverse unit. So it's like they find ways to create the cash to keep spending in AI. And from that perspective, my viewpoint is they have this giant jug of water that they're pouring into a funnel. So long as they keep pouring that, make sure your cup is out and you're getting some of that water. Eventually that'll stop pouring and you should look for signs of that. But I'm not seeing fatigue at that spending level quite yet. And so the cyclical names will continue to be the high alpha names, I think, at least for the next 6 to 12 months.
Yeah, I think your outlook's exactly right. And in fact, it seems to me that instead of slowing spending is actually still accelerating, which is really extraordinary. I have a theoretical question for you. I don't know how much you delve into computer science theory, and I think that generally anytime investors start talking about theory, they're making a huge mistake. You know, like you can point to the theory all you want, but the P&L is what's going to drive the share price. But I do think it's a really fascinating question about whether or not there is something fundamentally different about compute as opposed to, say, something like memory. And obviously the two are very, very related. As compute grows, so does memory. As bandwidth grows, so does compute. Like those three tech, what are they? What would you call them? The muscle of technology is compute, memory, and bandwidth, and those three things grow in tandem. But I think the root of it though is compute, and I just wonder, do you think there could ever be a glut of compute? We've had memory glut, we've had bandwidth glut, but when I look back at tech history, I can't recall ever seeing a glut in compute. And in that regard, I think it's kind of like electricity is for the industrial economy. In the industrial economy, you've had gluts of commodities. You've had gluts of manufacturing capacity. You've had lots of gluts of shipping. But like there was never a point where we couldn't use all the electricity that we were producing. And the more you produce electricity and the cheaper it got, the more the other parts of the economy would drive forward. So I just wonder, in your mind, is there something unique about compute that makes it much less likely that we'll have a glut in it like we have in the other tech areas and the other tech cycles?
Yeah, I would say that history bears out what you said to be true. Throughout the 2010s, there were two memory down cycles, major down cycles, where a stock like Micron got crushed. But the cloud compute providers weren't even touched by that, weren't even phased at all. So we have had memory gluts in the last 15 years, and they did not coincide with the compute glut. There has never been a compute glut. And I mean, you never want to say never going forward, but I think for the foreseeable future, with compute demand growing so much, I mean, these big tech companies aren't stupid. They became trillion-dollar giants because they're not stupid, emphatically not. And they're spending everything they got on compute. That to me says a lot, that they share the exact same outlook that you do. These are the smartest guys in the room. I know they said that about Enron too, but I think collectively, these are 6 or 7 companies that have some of the biggest and brightest minds in the world, and they are spending everything they got on compute. I do not think we will have a compute glut at any point in the next 5 to 10 years, probably longer than that, but I don't want to make a projection out longer than that. But I don't think there's going to be a compute glut. And therefore, I think when the AI CapEx does slow down, it's going to hit those derivative names really hard, memory, storage, cooling equipment, stuff like that. But it's not going to hit the direct compute name, sort of like an NVIDIA or an AI accelerator name like that as much. Because again, I think demand there is secular and not cyclical.
I've got one more question about the AI thing. A lot of questions in the mainstream financial media, and also in a lot of the research I've seen Wall Street produce, arguing about what the depreciation schedule should be on NVIDIA's chips in particular, but also in general, just advanced parallel processing chipsets. What's your view about that? How do you think the depreciation costs are going to impact the P&Ls of the major hyperscalers?
Yeah, so Michael Burry made quite a fuss about that and scared the markets for a few weeks with those depreciation schedules. So what they've done is they've elongated the stated useful life of GPUs basically by twofold over the last 5 years. So useful life on the income statement was, or on the balance sheet was 3 years in 2020, and now it's 5 to 6 years for most of these hyperscalers. Burry's saying it's artificial so that they can decrease their depreciation expenses and boost their earnings. I actually think that it's real. I think the useful lives of these GPUs have gotten longer by 3 to 4 years, 2 to 3 years, because of two things. One, scarcity, and two, technological improvements. That we're in a supply shortage of compute. We're in a supply shortage of chips. So the useful life of an NVIDIA GPU back in the day, yeah, you would refresh that every 3 years because you could refresh it every 3 years. But when you have a GPU, as soon as you put it into a data center, it's being rented out at 100%. So when you get a new one, you're not going to get rid of that old one. You're just going to put it towards not frontier model training, but sort of edge inference training or smaller tasks, less high priority tasks. And so from that perspective, these GPUs are lasting longer because of scarcity in the data centers. And then the other one is technological improvements. There's a reason that a company like one of our favorite stocks in the last couple of years has been Veritiv. They provide cooling equipment for data centers. There's a reason that stock is soaring because companies are spending billions and billions of dollars on cooling equipment. They're not doing that for, excuse my language, shits and giggles. They're doing that to elongate the useful lives of the super expensive NVIDIA GPUs that they're buying. So because of that, yeah, I think the technological improvements and the scarcity actually create a situation where the useful lives of these things are longer. And if they weren't, then these big tech companies are just wasting money on Veritiv. You should go short Veritiv to the ground, right? So that's sort of how I look at things. And I do believe that these chips are lasting longer and being more useful for longer.
I want to take you back in time, probably before you were even out of college or high school even maybe, because I'm dating myself a little bit here. But I remember in the mid 1990s when the internet first came out, my dear friend, mentor, and lifelong business partner, Bill Bonner, was very skeptical about the use case for the internet. And he said, this is nothing but a fancy fax machine. And he poo-pooed, he wrote that Amazon was the river of no return and predicted it would go bankrupt. The people who have bet against the power of compute and memory and bandwidth have all lost, and they've lost badly for a very long time. And those same kinds of voices today are asking what the business case is for AI. How are they going to generate enough revenue to pay for all this CapEx is the big question. And the question I'd like to ask you as someone who is far more tech savvy than I am, my day as a tech guy was 25 years ago when I understood Broadcom and JDS Uniphase better than other investors. Today, I'm much more of a third party player. I'm reading the media and the investment reports, but I don't use the technology myself. I don't program myself anymore. So this is all third party to me. But I know you're much closer to it. The question I've got for you is twofold. Is one, what are some demonstratable proofs that AI is a very valuable application, that there are applications that are valuable, not just theoretically? And two, can you yet even, is there a glimmer of how a killer application that doesn't exist yet could be manifested by the enormous power of AI?
Great question. So on the first point, it's very topical because this week, actually, OpenAI released the results of a survey they did. They surveyed 9,000 workers across companies that use their platform, the ChatGPT platform. And they found that on average, those workers are saving about 40 to 60 minutes per day on professional tasks by using OpenAI's products. That doesn't sound like a lot, but if you can scale that, that's absolutely enormous. I mean, you have 160 million workers in the US, right? If 160 million of them save an hour a day, let's say all 160 are able to save an hour a day using AI, whether it's ChatGPT or Gemini or Grok or whatever it may be. You're talking 160 million hours saved per day, 5 days a week. That's 800 million hours saved per week. And then 52 weeks in a year, I think that's over 40 billion hours saved per year. Average hourly earnings are $40. 40 by 40, that's $1.6 trillion in economic cost savings per year, just on the state of AI today, if you scaled it and that AI did not get better. 1.6 trillion is massive, right? Like that's over 5% of US GDP. I think that's bigger than California's economy where I used to live. So this is, I mean, that's a massive number. And that's just the state of AI today. We're going to get better and better AI. That 1 hour per day is probably going to go up to 2 hours per day. Maybe it goes up to 3 hours per day. You take that 160 million number in the United States with workers, go to Mexico, go to Canada, go to Europe, go to Asia. I mean, it's easy to see how this number of economic cost savings runs into the, $10 trillion plus range. And then you got to consider, we're not just saving time. Like I use AI and I save time, but it's not like, okay, now I'm clocking in as opposed to 9 to 5, I'm going 9 to 3. No, I'm still going 9 to 5, but the 2 hours I saved are now going to higher value work. So you got to put a multiple.
Much higher. Yep.
Much higher value work. So you got to put a multiple on the economic cost savings. It's not just cost savings. And now you're doing higher value work and that's more economic output towards that. So I mean, when you really look at the numbers, I do think that just the foundational AI models alone, the ChatGPTs and Grots and Geminis are, I mean, they're proving their value. They're proving their worth, and it's scaling in the long run. We are talking, I think, over $20 trillion, maybe closer to $30 trillion in value add for the global economy. And from that perspective, I think the AI CapEx that we're seeing, I mean, it's about $500 billion this year from the hyperscalers. Next year, it's going to be closer to 650. That doesn't seem like a lot if indeed the end game is $20 trillion in economic value. So the ROI, I think, is absolutely there. I think that we are seeing use cases in the workplace today that are very valuable. In terms of what's the super app that's, or what is a use case for a super app, I really think, and this is the big risk to me in investing in AI stocks right now, I have seen a lot of the software darlings of the 2010s get absolutely destroyed in this AI boom, which seems totally counterintuitive because one would think the software darlings would use the AI to create better products and have higher growth and higher margins. But what's actually happening is the foundational AI models are getting so good that they are doing the tasks of the old software vendors.
Exactly. Yep.
Great example of this is Adobe. Adobe was like one of the kingpins of the 2010s. I mean, it was one of the prettiest businesses you could imagine. It was a monopoly in creative software. They were growing at 10 to 15% per year every single year. You could count on that. You could take that to the bank. They had 50% operating margins. I mean, this was a cash flow, high growth cash flow machine. It was amazing. And that stock has been decimated in the last 3 years because Gemini specifically is really, really good at doing what Adobe does. They have this new tool called Nano Banana where you can just, it's a text prompt to a photo edit. So you type in something, make my shirt yellow, and it'll, take a picture of you in a white shirt and make it yellow. Why do I need Adobe in that world? You see that with Adobe. You've seen that with DocuSign. You've seen that with UiPath. You've seen that with Duolingo. You've seen a bunch of the software drawings of the 2010s get destroyed in the AI boom because of the just hyperbolic growth of foundational LLMs. So to answer your question, I think the super app comes from one of the big dogs. It comes from OpenAI. It comes from Google. It comes from Microsoft. It comes from Amazon. I think it comes from one of the big dogs because they have the best data, they have the most resources, and back to your original thing, they have the most compute.
Yeah, I think I know I asked you the question, but I'd like to know what you think about my answer. I think the ultimate app for AI is going to be automation. And it's gonna be what allows the robots and the cars and other automated things that don't even exist yet because we don't have enough real-time automation capability. But I think AI over the next 20 years is going to automate virtually everything. That's
how I feel. I'm in the same camp as you, and it terrifies me, the implications of that for the labor market.
Yep, it's going to be a very disruptive change, but it's also going to produce so much wealth in ways that we can't expect yet that it will be okay. The Luddites are going to win the media contest, but they will not win the economic contest.
Luke, we like to give a little bit of value to our listeners. And I was reading one of your articles recently, and you've got a couple of names in here of companies that you like that I hadn't heard the names of before. So this was one of the articles, the AI investing cheat code just got patched. And you have a couple of names in here that I'm not that familiar with. Credo Technology, Lumentum, and ARM Holdings. You want to talk about those briefly, just or any other ideas you like for our listeners out there?
Yeah, sure. Absolutely. So that article gets into the heart of one of my favorite ideas right now, which I think is going to be a big theme in 2026. And that is the breaking of the NVIDIA GPU monopoly. That in the first 3 years of the AI boom from late 22 to late 25, it was just an arms race, land grab to get whatever compute you could get. Give me these GPUs, give me these accelerators. NVIDIA made the best ones. But an NVIDIA GPU is kind of like a Ferrari of the AI compute world. What that means is it's really good at doing everything. But as we all know, you don't use a Ferrari as your daily driver. You don't take a Ferrari to the grocery store. You don't take a Ferrari to pick up your kid unless you're trying to impress the neighbors. You use the Ferrari for specific use cases. So what these big tech companies have been doing, for lack of a better option, is been using Ferraris as their daily drivers for compute over the last 3 years. And they're paying exorbitant prices for these NVIDIA GPUs. And that's why NVIDIA's margins, gross margins, have been going up and up and up and up and up. And why that stock's been doing so well. But what's happened is big tech is saying, I'm tired of paying up for these big GPUs. I want to create chips that are more specific to me, daily drivers for what I do, that are cheaper, that are more efficient. And they've been working on these efforts for 2 or 3 years now. But there was finally a big breakthrough in late 25. Google has the most advanced, Alphabet has the most advanced custom silicon project, custom chip project called the TPUs, Tensor Processing Units. They built Gemini on top of these TPUs. Gemini 3 launched about a month ago, and it was sensational. A true breakthrough. ChatGPT was always the leader. Gemini was always a laggard, and they just leapfrogged him. And it is such a big leapfrog that Sam Altman, OpenAI CEO, was like, code red, code red, code red. We all gotta, go full bore on trying to get the lead back. Like, he's freaking out over there. That's how big the jump was. That was a validation moment for custom chips because Gemini was built on top of TPUs. So it's more efficient. That validation moment, no surprise, a week later, Meta's like, knock, knock, Alphabet. I want your TPUs, not NVIDIA's GPUs. The dominoes are falling. And so I think we're going to get this breaking of the NVIDIA GPU monopoly. You're going to get a shift towards custom silicon. Amazon's got their Trainium chips. Microsoft has Inferentia. Google has TPUs. Meta has their own chips. They all have their own chips. I think you're going to get more money into those efforts in 2026 now that Alphabet had a big breakthrough with their TPUs.
Luke, can I ask a question about that? Do you know who's manufacturing all the custom silicon?
Right. So that's where the picks come from that Barabbas mentioned. So the There are two leaders in the actual kind of design of these chips, Marvell and Broadcom. Broadcom is working with Alphabet. Marvell is working with Amazon and Meta. So those are kind of the big design leaders. Now, very interestingly, in the last week or so, and this kind of goes to show how much the market believes in Alphabet's TPUs, reports have leaked that Amazon and Meta are thinking about leaving Marvell to go to Broadcom because Broadcom's working with Alphabet and Alphabet's the one that had the big breakthrough. So I still like Marvell. Those chip programs are still accelerating and still going, but they need to up their game or else Broadcom's going to win that business. So I think Broadcom's kind of like the next NVIDIA. I think they're the big titan that's going to take over the custom silicon industry over the next, more than 2 years plus, but definitely in 2026. And then at a lower level, they're all, fun fact, all of these chips are still manufactured by TSMC. Like the fabrication is still done by TSMC. So the real monopoly that's actually untouched here is TSMC. So they're still in the playbook. But then at a deeper level, something that's really interesting is when you stand up a GPU cluster by NVIDIA, an NVIDIA data center, NVIDIA has their own in-house networking. So one of the most important things for a data center is the GPUs have to communicate. One GPU talks to this GPU, talks to that GPU. They have to talk, communicate, work together in order for that GPU cluster to be efficient, to be successful. NVIDIA GPU data centers, those clusters, in-house networking called InfiniBand. But when you stand up a custom silicon GPU cluster or XPU cluster, you're not going to use NVIDIA's in-house networking, right? You're going to use a different networking solution. And so I think there's a huge growth opportunity here for the other networking players, the InfiniBand competitors. That's where Lumentum comes into play, ticker LITE. That's where Coherent comes into play, ticker COHR. Ciena is another one in there, CIEN. These are the networking solutions, networking alternatives to InfiniBand that if indeed we go from NVIDIA GPU clusters to custom silicon clusters, you're going to see those companies win a lot more deals.
I think that's great information, and I think to me, the Taiwan Semiconductor is such a dominant manufacturer that's a really good lower volatility, simpler if you can way to play all of these names. The networking names are ultra important, and what I've seen for 30 years now in tech is compute leads and then bandwidth and memory follow. And so these things also, all these new custom data centers are also going to need a whole lot of memory, which is what you'll also see. And I've got one big conclusion about this, which is one, I think that Google is a clear winner in this space, especially with their list size. They not only have very good technology, perhaps even the leading technology for the moment, they also have YouTube and they have Gmail and they have Chrome, which means they can bring their AI to billions of people for free. And I think one of the big problems that OpenAI will have is that they do not have a list universe to use. And being in the publishing business, we know the power of the list universes. So I think that's one other thing that Google really has a big advantage of compared to the other to some of the other hardware companies and AI providers. Google has a great list. Meta obviously has a great list. Microsoft has a corporate list, and they also have individuals because they have browsers and they have Hotmail. Does Hotmail even exist anymore, or is it called something else now? That's how behind the times I am. But I think having access to direct consumer names is going to be a big part in the AI revolution.
Yeah, it's built-in distribution, and Alphabet absolutely has that built-in distribution. Not to mention, just talk about Alphabet and Meta, that built-in distribution also gives them built-in data, a continuous stream of high-quality data, and data is the fuel for AI models. So that's why I think Alphabet is able to create really good AI models, is they know, I think YouTube, for example, that's the most, that's TV these days. That's the most watched platform out there. They know exactly what billions of people are watching, how long they're watching it, when they're clicking through it, when they're going to the next thing. They have this web of all basically interest data. you can create a lot of cool AI stuff from that. And they have created a lot of cool AI stuff from that. So yes, the lists give them built-in distribution and built-in data, which is massive, a huge advantages in the AI race.
Tech always changes so fast, but it is very hard for me to imagine a company that has more moat and more built-in advantages than Google does right now. And look, we can make arguments about all this stuff. I mean, the moat that Microsoft has is great. The moat that Meta has in social is great, and their data advantages to all those things. But the size and scope of what Google has, to me, is just so superior, and the hardware and the distribution and just sort of the core technology, the amount of IP they have, and their software is always just so darn good, in my opinion, compared to Microsoft's or Facebook's.
Go ahead.
Sorry, real quick, Luke. One thing I think is that we've seen too is there's kind of become this awakening of people's consciousness, right? So one big slip that Google made early was generating historical things, and they just had a bunch of minority people that weren't part of history, right? So, and then you've got Elon Musk, who's got Grok, and he prides himself on more like freedom, right? And more like anti-woke stuff. So I think that these companies still need to watch how they position themselves, because even though there's kind of leaps of Gemini over OpenAI, over Grok, et cetera, I think people's trust factor is going to be a big thing going forward.
Oh, I agree entirely. I think it's really one of the things I like about OpenAI is that Sam Altman issued a code red so early, right? Like, that's what I like. I want a leader who has urgency and the faculty to understand, okay, we're in the third mile of a marathon. And just because Google took a little bit of a lead in the third mile, nobody cares who's in the lead in the third mile of a marathon, right? Like, but the market freaks out. Sam Altman says, okay, let's get to work and let's take the lead in the fourth mile. And then someone's probably gonna take the lead in the fifth mile, and someone else gonna take the lead in the sixth mile, right? It's gonna keep changing hands, and we're not gonna, and that's why I think this whole idea that, the OpenAI, there's this chart circulating FinTwit where it says OpenAI complex, the companies tied to OpenAI are going down and the companies tied to Alphabet are going up. That's a short-term dynamic. And that'll fix itself in the next, 3 months OpenAI, I think, is launching a new model the next week or so. And I think that's going to be pretty good. So I just think, again, we're going to keep leapfrogging. The trust factor is going to be involved there. The compute's going to be involved there. The lists are going to be involved there. It's a multi-factor analysis. But the end result of that is that they all think they can win, and they're all going to spend like they think they can win. And that's why the AI CapEx is going to continue, and why these derivative names are going to continue to benefit from that spend. And so that's why I remain primarily bullish on these names.
Great stuff, Luke. Thank you so much for joining us today. We know you're on your way to the airport. Where are you heading?
I'm heading out to your neck of the woods, Baltimore. It's the holiday party time. It's holiday party time.
All right, great. Well, you guys enjoy. And thank you very much for your insight and your time. I think this is one of the best interviews we've ever done.
Yeah, for sure. Thank you, Luke.
Thank you, guys. Really appreciate it.
Porter, he didn't disappoint at all. And I know I squeezed a couple of free picks out of him. So that just rose to the top, one of the best guests that we've ever had. We knew that, but now I think our listeners know that.
It was really great listening to him to talk about the impact of the Google's new custom silicon chips and what that's going to mean for the continued AI build out. I thought that was really very insightful. I also loved how he was able to kind of squash these I think false skeptical views about how the depreciation schedules are a big deal. They're not, and how the latest AI OpenAI stumble, with Gemini taking over the lead, how this is the third mile of a long marathon. It doesn't really mean anything. And it's just interesting the way, as you know, the media portrays everything as the end of the world, when, what they're missing, of course, is just the enormous amounts of automation that are going to transform our lives over the next decade. And instead of reporting on anything like that, they're just reporting on whatever they think is most likely to scare people, which is unfortunately very typical.
Yes, for sure. So Porter, what I'd like to do for our listeners is, you're in the prediction business, and I think you've done a fantastic job over the history of your career making macro predictions. Let's do a review of 2025, and then let's do a couple of predictions for 2026. What do you think were your biggest predictions / insights you had in 2025? I know one of them comes to mind immediately, but I'll let you fire away and see if you get it.
I think the biggest thing we got right was that no matter who was elected as president, that inflation was going to continue to be a major factor in our economy. And we wrote many times in many places that you had to own gold, you had to own silver. In fact, we said very clearly that silver was going to be the very best performing commodity, metal commodity of 25. And I think it's up almost 90% year to date. And it did outpace gold. It did outpace platinum. It did outpace palladium. It did outpace copper.
You specifically wrote about the gold silver ratio and how out of whack it was. How historically it's been in the 30s, and we were 85 to 100. And we
were 2 standard deviations away from norm for the silver to gold ratio.
Yep. What happens when you have standard deviations? They usually revert back to the mean. So
they're going to revert. Yep.
That was a big one. Yeah. For me, the thing that stood out, because I remember seeing all the feedback, but this ties in exactly to what you're saying, was when you called Doge a farce. And, you want to talk about upsetting a lot of readers. That was probably one of the things that we got the most feedback on this year, and you absolutely nailed it.
Yeah, so we only have one data point, so it's a little early to call victory, but I thought it was very significant that in October, we saw that Trump had been very effective at raising taxes. You can call them tariffs if you want, but that's just because you don't know anything about economics. Obviously, all taxes are paid for by consumers. Taxes are an increase in the production costs. All production costs get passed along to consumers. Duh. So taxes went up 24%. Year over year in October. Taxes collected, Aaron, went up 24%. And yet our deficit for October was 10.5% larger than our deficit was last October. So what I said from the very beginning is that Trump can raise taxes. No question he can do that. But no matter how much he raises the taxes, he will not lower the deficits, because there is no such thing as cutting spending. As I said, the spending will never stop. The spending will, repeat after me, the spending will never stop. And it surely hasn't. So we got that right. And that, of course, is why you've seen such a huge increase in the metals prices. These things are intimately related. And I think that's the biggest macro thing I got right. What about the things we got wrong in 2025? I think the biggest thing we got wrong is that I did not perceive at all how weak property and casualty insurance stocks in the sector would be this year. Now, it hasn't been calamitous. If you look at the ETF, it's flat on the year. We're about flat overall with our various P and C recommendations. But those stocks are so popular with our audience, and they compound so regularly and so continuously. It's very odd to have a year where there's no appreciation in those stocks. But look, as I like to say, I've got 2 balls and neither one of them are crystal. I can tell you those stocks are going to be great performers over any 5 to 7 year time period, but I can't tell you what they're going to do next Tuesday.
Yeah, for sure. And, another thing that you've been talking about, obviously, since the end of America in 2010 is, the United States and the world unraveling. That has accelerated greatly. I think that's probably my biggest prediction. Unfortunately, I don't take any pride in that whatsoever. I think a lot of people look for Trump to be the savior that was going to go after the deep state and all the things that he's been talking about. And the reality is, it looks more and more like he is a deep state. So
yeah, absolutely, it's just a new flavor of deep state.
And that's one thing that you've been great at all along. You and Doug Casey beat that drum, right? I have a political science degree, and I learned a long time ago. You know how many times I voted in national or local elections, Porter?
0.
Zero, because I'm not going to vote for tyranny on either side. I don't give permission for people to tax me at this rate or that rate. I don't give permission for people to set rules on me. And yet, somehow people are fooled every 4 years or every 2 years. And it's the right wing and the left wing, it's the same bird.
Yeah, and to me, there's something very psychological and pathological about people's faith in politicians. There's no way that President Trump knows who you are. He doesn't even care. By the way, I've met him, and I'm sure he doesn't know who I am. But the idea that these people who don't know who you are, are going to do anything for you and your family is absolutely nonsense. They're going to do everything they can to reward their patrons and the people in D.C. who create the government. Trump keeps saying, for example, when he's collecting taxes, that he's winning for America. Another victory for America. What are you talking about? It's not a victory for America to increase the cost of government. It's a loss for America, and it's a win for the government, you moron. But try explaining that to anybody. Good luck. They won't believe you. It's bizarro. And I don't vote either. I don't vote because it only encourages them.
Exactly. Yeah, but I think that's probably my biggest prediction is, and you can see it all over X. Now people are finally getting to the point where they're questioning everything and they realize that we are just getting scammed and everything is a fraud. I mean,
just
everything.
look at every single thing that Trump promised that got his voters excited. The number one thing he promised was that he was going to cut $1 trillion out of the government budget. Well, he didn't do that. In fact, he increased the government budget at a higher rate than Biden did. All right. The second thing he said was no more wars. He's going to be the peace president. The very first thing he does is the most aggressive military action our country has seen in 25 years. He bombs Iran. Brabsy, you think there's going to be any blowback from that? You think all those radical Muslims in Iran, which is a huge country, is just going to forget about it? Oh, never mind.
No.
All right,
not at all. And there's even a funding bill, the $800 billion military bill that they are passing through. He still snuck in $800 million for the Ukraine. Which is like,
of course,
just give up on that, please. But yes, but I think
but Aaron, that's totally different. That $800 million is going to go to the Republican corrupt network in Ukraine, which will funnel the money back to the patrons in D.C. Just watch. But it's not the same because they're not Democrats. They're the corrupt Republicans, and the corrupt Republicans are way better in every way. You've got that all wrong. How about this? When's the last time we saw a president murder people by drone? That would be Obama.
That was Obama. Obama was great at that. The Democrat president.
So Trump, again, has taken that a step further. We're now murdering people, with military jets and bombs, which is, that's kind of like making sure they're extra dead.
Yeah, exactly.
But what are we doing as a country blowing up individual speedboats? Like, do you know how big our Navy is and our Coast Guard is? Why don't you board those boats, put those people in jail, and confiscate the drugs? And why are you so afraid of any evidence being allowed to exist afterwards? None of this makes any sense. And if there had been a Democrat doing this, our audience, our subscribers would be up in arms.
Yep.
But because it's their dumb monkey in the White House, they're all excited about it.
Yeah, I mean, look, I live in Colombia, so Venezuela's my neighbor. And I can tell you right now, firsthand knowledge, Colombia is the manufacturer of drugs. Okay.
Oh, really? I had no idea.
Yeah.
I'm shocked.
I've never heard one person ever say Venezuela ever. Okay. And number two, the distributor is Mexico.
By the way, do you know why they can't make drugs in Venezuela? Socialism. They can't get anyone to work in Venezuela. They can't even pump oil in Venezuela, and they have more oil reserves than just about anywhere in the world. So no, they can't make drugs in Venezuela because they can't make anything in Venezuela.
Yeah, so my biggest prediction, Porter, and look, who knows? Because I think a lot of people have awakened, but what can you do against political leaders and regimes and all that stuff is people are just going to start seeing everything's a scam, and they're going to lose confidence in the left or the right or whoever comes in, and they're going to question things. Now, what does that mean for So my question, I think we agree on that, is what does that mean in 2026 as things deteriorate more? People are really going to need a lot more financial advice, and they're going to need Porter's permanent portfolio. And, what I love about Porter and Company and being the director of marketing is, we're more slow and steady and protective, as opposed to overpromising, under-delivering, and gambling. So I think we've done a great job navigating that. Let me ask you this. So we have Erez Kalir, which is one of the best to ever do it. And he was big biotech. His biotech was unbelievable. Probably the greatest launch to a newsletter ever, I would say, for returns. And now we have him pivoting to tech frontiers. So where you essentially have taken the cuts off him, haven't you? And you're allowing him to really go deep into some tech stuff.
Aaron, this wasn't me. Erez reached out to me in late 23 and said, Porter, we're about to have the biggest biotech bull market in our lifetimes. This is going to be a 5 to 7 year period where the biotech index will probably be up 3,500%, the index. And I'm like, great. How do we take advantage of it? And so he came on board, and his picks have been amazing. He hasn't had any, significant losses, and his average annualized return is something like 50% across maybe 25 recommendations. I mean, it's been extraordinary. So he said, okay, great. We have our biotech portfolio. I'm going to add to it here and there, but we've got our names. We're in the right place. So what should we do next? And I'm like, well, let's broaden the scope then. Let's look for other areas of technology where we believe we're at the base of a extremely long growth period of productivity and stock prices. So yeah, we're going to expand all that. I'd like to, if you don't mind, I don't mind plugging Erez and our technology stuff because it's world class. And I'm absolutely certain there is no higher quality tech newsletter available anywhere. And you can just read one of Erez's articles and you'll see why. This is a guy who has 30 plus years of experience directly in the research community in these kinds of technologies. So he knows everybody. And of course, it doesn't hurt that he's a Rhodes Scholar. It doesn't hurt that, he studied at Stanford, all these things that are just very unique. But I like to go back to one question that you asked earlier, which is, what do I think the big macro call is going to be for 26?
Marty Fritzman.
No. Well, I think this might really surprise you.
Okay.
Because I really think that Trump's increase in taxes is going to become extremely disruptive to the economy. And I think, and I haven't said this anywhere else publicly yet, but I think we're going to have some kind of a major economic hiccup next year. Now, whether that is a garden variety recession, that could be, but I think the combination of these incredible tax increases with the job replacement from AI is going to cause some really serious economic repercussions. And so, ironically, even though I do believe that the Treasury bond is on the way out as a gold reserve asset and all that, I think you could obviously see both. You could see Treasury yields continue to go up, and you could have a recession. That's what happened in the 1970s. That could happen. But I just think you're going to see much weaker economic growth. You're going to see more companies go bankrupt. I don't think most people realize this, but we had more large companies go bankrupt this year than we have seen since 2010, which was the tail end of the great financial crisis. And I think you're going to see employment go much higher than people expect. And you're going to see, we've already seen this, the weakness in subprime lending. You're going to see a big decline in consumer economic activity because unemployment's going to grow and taxes are going to really bite.
Yeah, Porter, and also, housing, it's been holding up by a thin thread, and that's going to buckle as well. So, I think 2026 honestly is going to be one of the hardest years of Western civilization's modern life. See some things that we haven't seen before. I'm afraid of that, but I think that could happen.
I think you've really got to avoid anybody who's tied into consumer lending. The Lending Club, something like Carvana, which has a lot of exposure to subprime auto lending. Ally Financial, which does a lot of consumer financing. those kinds of finance businesses are going to come under a lot of strain. And nobody sees this, but I think we're going to start to see some regional banks fail. And we really haven't seen that kind of economic pressure in a long, long time. And sadly, the government's response to it is obvious. They're going to print more money. They're going to make all these fundamental problems much worse. And Brabsy, it wouldn't surprise me at all that 26 is sort of like the beginning of a long period of a lot of economic problems, because we very simply cannot possibly afford the size of the government we have, and attempts to pay for it by raising taxes will have really big economic impacts. So, and I think gold has sort of proven that we can't just print money forever. So all these things are kind of, in my opinion, kind of they're going to kind of come home to roost in 26, and we'll see more recognition of many of the problems that you and I have been writing about for a long time.
Yeah, no, I wanted to bring that up because I want our listeners to know and subscribers to know that these are things that we think about 24/7, because we really want to be ahead of what's coming, and we want to give them the best possible investment advice to not only protect but also grow their savings. And it's, our jobs are a lot more difficult than they've ever been, Porter, because beating inflation is not easy. True inflation, not the CPI, but, sadly, I see, unlimited amounts of expos from families that are trying to decide between paying rent and paying their health insurance. And I mean, just their monthly and their deductibles. Remember Austin, the copywriter that used to work for us? So he had built the perfect life in Colombia. He had a finca and all that. And he married a Venezuelan, and she wanted to move back to the United States. I was like, well, hold on a second. You're doing it wrong. You're going backwards. So I was like, okay, he's young. He's 29 years old. Okay, go for it. He had this post the other day on X, and basically he realized that in Colombia, he was paying like $100 a month for insurance that had no deductible, just a copay of $20 when you go in. Great. Fantastic. Everything's cheap here, and it's fantastic care. Now, for him and his wife and their newborn, they're going to be paying like $30,000 a year and have another $10,000 of deductibles before insurance pays one penny. And his post was, how can Americans afford this? And the answer is they can't.
No. Well, as you know, insurance isn't really insurance at all. Medical insurance is just group purchase, and you get to pay for all the people who can't. So it's ridiculous. I wouldn't recommend being a part of any insurance group if I were you in America. And Brabsy, what have I always said about the poor?
Don't be one of them.
Don't be one of them. That's all I can tell you. They've always been with us. So they always will be with us. Don't be one of them. And the best way not to be one of them is very simple. It's save half of your after-tax income and invest in great businesses, which is the core of what we do. Sure, it's fun to talk about these macro things, but guess whose earnings are going to go up next year no matter what happens with taxes or inflation? Guess which? Hershey's, Philip Morris's, Coca-Cola's. Yep, anybody who's manufacturing coal or natural gas, right? These things always increase over time. And if you're just smart enough to save your money in very valuable businesses, you will die rich. So it's great that we have these problems. It gives us something to talk about. It gives us something to warn people about. And from time to time, it does set up really lucrative trading opportunities. I made a whole lot of money last month shorting Carvana because I knew that the losses in their subprime portfolios were going to grow and that would spook the market. So there are times where having this information is helpful and profitable. But the core thing is live below your means, save your money in great businesses, and go back to sleep.
Yeah, absolutely. Well, Porter, for our listeners out there that are new to us, we really appreciate it. For our longtime listeners, thank you so much, especially for the ones that aren't T-Rexers. You'll understand that. We love the long armors. We have some exciting things coming up this year. And if anybody's not on any of our lists, we have an amazing daily reader. I think we've constructed one of the best in the industry. I would still argue that maybe Bill Bonner's is slightly better, only because he's probably
Definitely.
the world's best daily writer, like hands down. And his sarcasm and humor and depth is just unparalleled. But you can go to portersdailyjournal.com, portersdailyjournal.com. One directive that you've given me from day one as a marketing director, I think you've learned a lot of lessons over your near 30 year publishing career, is value, value, value. And that's what we do with this daily journal. We're not there pummeling them, asking for them to open up their checkbooks constantly and asking for them to give us value. We're giving them value nonstop. And that's one of the reasons why I really enjoy working here.
Yeah, great. And listen, I want all of our readers out there to have a wonderful holiday, and try not to worry too much about the future. The sun's going to rise tomorrow. Everything will be okay, and we're definitely going to make a lot of money in our portfolios next year, no matter what happens in the economy. So I hope you'll continue to tune in. Aaron, I want to congratulate you on your wedding anniversary.
Thank you.
And I hope you guys have a wonderful holiday. And to all the listeners out there, Merry Christmas and have a great New Year.
Merry Christmas. We'll see you guys in 2026.
Thank you for listening to the Porter & Company Black Label Podcast with your hosts, Porter Stansberry and Aaron Brabham. We'll see you soon.